Ladies and gentlemen, welcome back to the channel. It's your boy Jay. We're going over all things hard money in this specific episode. I'm going over some of the advantages, some of the disadvantages, and how you can use them to buy real estate today. So what is hard money? Hard money is the same thing as getting a traditional loan from a bank, except with hard money and hard money loans is that it's a little bit easier and less stringent that you would normally have when you go to a traditional bank. Now, here's an example. Let's say we want to buy a house and you go to Chase, or you go to Bank of America or any other big bank. You walk into them and you say like, hey, I want to get a loan to buy a house. They tell you, okay, here's all the paperwork that you're going to have to fill out. They're going to get you pre-qualified, which is where you're essentially going to say, after turning in your credit score and how much money you have and your tax returns, they're going to say to you like, okay, you qualify for a house worth this much money. So you take that paper now that you got pre-qualified for, and then as you're shopping around for properties, you know that you can find a house that's worth $300,000. You don't have to worry because that paper essentially tells you, yes, I'm pre-qualified, or it says it to the person that is selling the house and to the realtors that's listing the house. Yes, this person does qualify with house. They're not just wasting time just knocking on doors and kicking tires. So when it comes to hard money, very similar to that, but except a lot less stringent, a lot less rules. A lot of times with hard money lenders, they don't even really care about your credit score. They don't care so much about your tax returns. What they do care about is your experience, and they also care to know how much money that you have to put into the deal so that they know you're not going to walk away from it. Now, those are probably the two biggest, but the number one thing they care about are the numbers on the deal itself. As opposed to a bank where they know that you're going to be living in that property, they just want to know that the value of that house is worth it. When it comes to a hard money lender and loaning you money, they want to know that if you were to ever not pay them $1, they're going to take over that property. Now, that's not to say that it's different from a bank because they would do that as well, but with hard money specifically, they're ready to take your property like that. And the reason why is because you're paying a very high interest, and that high interest is what's going to allow you to rent, because this is a non-principal payment loan. And when I say non-principal payment, what that means is when you have a loan amount of $100,000, every month when you make that payment, compared to a big bank and a 30-year mortgage, you're renting that money. So that money, that interest payment that you're making to them on these interest-only loans, you're never going to pay down that $100,000. So even if I borrow a loan in January for $100,000 and I use it for 6 months and every month I make a mortgage payment, at no point will that $100,000 come down. It's going to stay $100,000 until the loan is paid off. And all those payments, those are interest-only payments that a hard money lender is collecting, is going to use that as the mortgage for your property. Now, when it comes to the hard money loans, there are advantages, there are disadvantages, and I just gave you some of them. So let's go with them in a little bit more detail. So one of the major advantages with hard money loans is that they're fast. If I go to a bank and I try to get a loan, we need this document, we need this paper from you, we're also going to need your tax returns, we need this. They constantly need one more document. If you've gone through the home buying process, I can assure you, you've all been through it. It's where they literally come back at the last stage of the game and they're like, hey, can you also send us one more of this? You know, we're also going to need one more of this thing. It gets repetitive. It gets irritating. You're so fed up. You want to just get to the end, but they're constantly delaying it, pushing it, asking you for more and more information because the underwriters or the people who essentially say, yes, this loan is going to be good because the value is there and whatnot, are the ones that continue to push for more and more documents. I couldn't tell you why they do this, but I'm with you because I've gone through it myself and it is incredibly infuriating. When it comes to hard money loans, you don't have to deal with as much of the BS as you do when it comes to the big banks. And one of those benefits are the speed. And they don't typically ask you for as many documents as they do with the big banks. And the reason why they do this is because they care more about the deal and they care about your experience because they want to know that the person they're lending the money to, they've been flipping houses, they've got experience flipping houses, they know how to sell something, they're not going to walk away, they don't have as much concern as they do when it comes to these lenders who's lending out a loan and they've got 30 years to pay it. Typically on these hard money loans, you only have about 1 year. Now, they have different loan programs, and every hard money lender is slightly different. This one will offer you more percentage, or sorry, less down. This one will offer you a lower interest rate. This one will offer you less points. They're all a little bit different, but for the most part, generally speaking, the rules are a lot less stringent, and you also do have the speed, which is being a big part of it. Another advantage that you're gonna get with hard money loans is sometimes if you can get a hard money loan from the people who know you really well, or the lenders that you have experience with, sometimes they may not even require an appraisal. Now, that's not always typical. Again, every hard money loan and lender is going to be a little bit different than the last one. But I can tell you from my own personal experience that there are a number of hard money lenders that I deal with that do not require me to get appraisals. And here's why. A lot of times, if you're buying a property and you're buying it way under market value, like this very property that we're in at the moment, then you don't have to get an appraisal because the lender already knows if you ever were to default, there's so much value in that property already. So here are the numbers on this one. I bought this house that we're currently in for $255,000. Now that $255,000 is way under the market value because the house that is right across the street that I'm looking at right now was purchased for $400,000. That $400,000 purchase was about a month and a half ago. Now, here's what makes it truly valuable having this house. This house is about 900 square feet, 2 bedrooms, 1 bathroom. Really simple, it's like a little cottage. The house across the street is 1 bedroom, 1 bathroom, and it is 500 square feet. So for about half the square footage, same bedroom and bathroom count, and needing just as much work as this, that house is $400,000. This one is $255,000. So I essentially have at minimum $145,000 worth of value in this house before I ever touch it. Now, once this house is fixed up and I renovate it and I do a new kitchen, I do a new bathroom, and I really make it livable and nice and something that people really desire, I know I'm gonna push that value even more, right? That's the benefit of having what we call value add. Value add is where you can take money or value and stuff it into a property that isn't currently there. One way that we do value add is by renovating a property. It's a really simple value add that most people are aware of. Once I do finish the renovation that you're seeing here, this property is gonna go from being worth $400,000 currently, right? Again, bought it for $255,000, but it's worth at least $400,000 because the one across the street is worth $400,000. If I were to finish renovation, this house is gonna go up to about $500,000 to $550,000 in value. Now, if you think about that, if I bought it for $255,000, when I'm done with it, it's worth $500,000 or $550,000. Imagine having $300,000 worth of value inside of a property. That's immense. What I can do now is I can borrow against it, also using hard money. And I can take out a loan for all that equity that's been built up for what I've paid and what it's worth. Here's my loan. So hard money lenders are great for that as well because it's another way for you to pay off your high interest loan that you're gonna get typically with hard money because again, you're renting their money. You can use that equity to pay off that original loan and go from, let's say 12% all the way down right now where current market trends are around 6.5% to 7%. Much better option, and I can now pay down that principal over the span of 30 years versus the hard money loan, which my principal balance will never get paid down. Another great advantage when it comes to hard money loans is how much money they're gonna require you to put down into your deal. Now, if you're buying a house from a big bank, a lot of times, especially if it's a personal residence, you can get 3% down payment, which is phenomenal, by the way. Let me tell you, it's phenomenal. But here, we are real estate investors, and real estate investors, generally, we're gonna be looking at about 20 to 25% down payment on all of our investment properties. Is that to say that that's always the case? Absolutely not. Because there are much better options out there. And sometimes if you have a hard money loan lender that's really good relationship with you, you can get the best terms. So I'll give you an example. The terms I got for this property, I got 90% loan from the lender and I'm only paying 10% down. That's a great thing. So as opposed to me coming up with about $110,000, instead I've only had to come up with $55,000 to cover the purchase of this property. That just meant that it was a lot less money for me to put out of my pocket in order to get it. So if you guys are out there and you're looking for some hard money lenders, just know that if you go to your local real estate meetup groups, or if you reach out to some friends who've been buying deals specifically through real estate, that a lot of them are going to be able to connect you with hard money lenders, and you'll have a lot more opportunities to get more deals as opposed to the ones that you would get if you just went with a big bank. So let's go over some of the disadvantages now when it comes to hard money. Now, there are going to be a lot of more advantages, a lot more disadvantages, but I really want to give you guys a nice chunk that you can use and just kind of take with you and put in your back pocket as far as this video is concerned. So some of the disadvantages when it comes to hard money: high interest. My God, the interest sometimes is ridiculous. So on this particular property, I'm paying 12% interest. That is a good interest rate when it comes to hard money loans, because I've seen them as high as like 14%. And the way that they do that is, again, you're renting their money. So let me explain that a little bit more detail so you can really understand what I mean by like the renting of money. If you were to get an apartment, let's keep it real estate related, get an apartment, and every month you pay money to the rent. That rent, you'll never see that money. It goes to the black hole of real estate that makes the person that owns the property a little bit more wealthy, because you're essentially paying off their mortgage, or it's getting credited directly to them if they have no mortgage on the property. That is essentially the same thing you're doing with hard money loans. You're renting the money from the lender. So the loan is $100,000. Again, I'm going to go back to what we talked about earlier in the video. The loan is $100,000. And you have a loan mortgage payment of $2,500 a month. Every month, $2,500. Just like you're paying rent, exactly the same thing. I'm paying $2,500 a month because I'm renting money as opposed to an apartment. And when I'm done with the loan, I pay off that $100,000, and now that $2,500 a month payment, as many months as I paid it, goes to the black hole of real estate, and I'll never see that money again. But the benefit of being able to rent that money is that I have less money to come up with out of my own pocket so that I can do more deals. Because the goal is to be able to do enough deals that you have the bandwidth for, so you can make lots of money in real estate. That's why we're doing this, right? So when it comes to some of those disadvantages and the high interest rate, it is something that you're gonna have to take into consideration, because you're not gonna be able to pay down that loan, right? Not every month until that thing is paid off. But that interest is what's really gonna kill you if you start holding on to the property for too long. So one thing I tell people, always be mindful of your renovations, how long it takes, what you're putting into it, because at the end of the day, all those rent payments, they still come out of your bottom line. So even if you overspend on your tile or you underspend in your kitchen, your monthly rent payment to that mortgage is still going to be one of those line items that you can't back out of. So always do a fast renovation so that you can now take that high interest rate and try to cut it down because you're finishing the renovation faster so you can pay off that loan faster. So another big disadvantage when it comes to hard money loans is what they're going to do if you don't pay that mortgage. Now, a lot of times when it's your personal residence and you have the big bank, you have a lot more leeway in terms of, you know, the bank coming after you, trying to take over your property. It can be a really long, drawn out process. When it comes to real estate hard money loans, it's completely different, right? When it's a primary residence, especially because we live here in Florida, where this is one of the best, if not the best, homestead states, meaning that there are so many protections for people that have a primary residence here in Florida. That doesn't apply to real estate deals because they're only lending money to entities. That's like LLCs, that's a land trust. And because they're being lent to a non-living person, essentially vacant properties, the process for them to take over your property when you don't pay that mortgage, so fast. They'll take that thing really quickly if you really fall short on your mortgage payments. So some of the things that you really gotta make sure you take advantage of and just really make sure you stay on top of is how often you're making that mortgage payment. And it might sound like, well, yeah, duh, well, why wouldn't you? Well, you never know. Like, you're gonna run into some tough times, especially the more ambitious you are in real estate. I'm a perfect example of somebody who takes on way more than they can chew, and I have a multitude of properties, and I feel like I'm drowning every day. But you know what? They always say high risk, high reward. And I'm a really big believer in that. So something that still needs to be kept in mindful of is that when you do take on a lot and you do have a lot of payments and you are stretched really thin, right? It might look great on the outside. You've got all these real estate properties, but when you're paying mortgage here, mortgage here, mortgage here, takes away from the amount of money that you have to actually finish individual projects. So just be mindful how much money you're putting into them, because at the end of the day, the interest, all the holdbacks, them coming after your property are some of the big disadvantages when it comes specifically to getting hard money loans. Ladies and gentlemen, if you enjoyed this video and you want to get more content just like this, be sure to subscribe to the channel if you haven't already, and like this video. Turn on those post notifications so anytime a new video drops, you're the first one to know about it. So until next time, catch you on the next video.